G'day all, welcome to another episode of the WealthLab podcast with Phil and Scott. Phil,
hey mate.
How you doing?
Yeah, really well, thank you. Obviously a bit warmer than you by the looks of things.
So we've now had the pivot in which it's still 30 degrees up in Queensland and it's 9 degrees in Melbourne. Looking forward to my fellow Victorians complaining about the weather for the next 6 months as per the legal requirements when you cross the border.
Is that what it is? Okay, good to know.
Yeah,
I'll remember
they issue a fine if you don't.
All right, fair. Yeah.
Now we're going to do something a little bit different. We're going to do a Scott and Phil react to some news that's come out. I thought we'd just sort of trial this for you, dear listener. So I'm just going to kick things off with crypto. What's going on? Is it a fad? Is it the future of finance? What do we think? I'll admit, during the 2021 lockdowns, I got really into crypto. I thought it was a really cool idea. Did you? What was your world of it? Did you come across it?
Right. I found it a really great way to make money disappear. I did have a bit of a dabble, and I treated it, as I tell anyone that asks me about crypto, I treated it like I would a sports bet account or something to that effect. Right. And just bought a bit of fun, stupid stuff that I saw to see what would happen. And what happened was I made some money vanish. Thankfully, not very much.
I really like that roller coaster of I made some money, pause, vanish. Oh.
Yeah. Well, I did make some initially, yeah. But,
so I think...
Yeah.
So this has always been my position when people ask us in a financial planning context, what's your views on crypto? I think the rails, the underlying infrastructure of crypto, will be what we use for payments, transactions, transfers. So, for example, the property transactions are so ripe to be put on the blockchain. So if you're buying and selling houses, a simple authenticated process to transfer without stamp duty, without real estate agents, property is not going anywhere. There's a clear folio number. That will be the most disruptive and the best use of blockchain technology. It'll take probably 20 years till we actually get there. But if anyone's tried buying a house and how difficult it is to deal with conveyances, there's a technology solution within blockchain that I think one day will be fixing that.
Yeah, I'd agree. It still blows my mind when you think about, house settlements, and there's still someone that's running around between offices doing the old swap the check for the deeds kind of like it's insane.
Yeah, it doesn't make sense at all. All. And yeah, so that's something that's really ripe. And I think if we look back at the late 90s technology bubble, they did realize the internet was the future, but they just couldn't figure out quite what bits.
Yeah.
So, for example, the famous pets.com domain name selling for $1 billion in like 1999 or something like that.
Yeah.
It was the right technology, but just the wrong bet. And I feel like that's going to be the same. The underlying technology of crypto is going to be basically free, have no value, but it will run everything.
Yeah. Yeah, look, I wouldn't be surprised. I think another area that I think is ripe for disruption by that, blockchain technology and that sort of stuff is just international money transfers.
Yeah.
Like I think back to when I was having a bit of a dabble in crypto and I needed some money in another currency, and it arrived in 30 seconds and cost me $1.20. You go down to the bank, it can take 7 days and cost you $30. So stuff like that, I think is great. But yeah, like you say, it's. You start looking at all these different coins that are out there and all that sort of stuff. Yeah, sure, there may be some winners, there may be some losers, but we're way too early to be able to take any kind of considered bet on who the winners are going to be. Bitcoin's obviously a clear standout, but who knows? I mean, we would have said the same thing about Nokia long enough ago.
Yeah, that's true. And you look at the top 50 stocks on the US stock market's easier. So if you take any sort of 10-year time frame, let's say 1920, it was all railroad stocks, and they were like considered the most, absolute industry stalwarts. And you fast forward only 20 years, and most of them weren't even in the top 100. They were mostly gone. Same thing. You look at the top 8. Look at the 80s or the 90s or the noughties. it's unlikely they'll continue. So if you look at the current stock market in Australia, it's basically banks. I personally think decentralized finance is really cool. I really like the idea of being able to juice up the yield you're earning through staking. I just think staking is a really eloquent process, and effectively what it is it's you locking up your money, not in a term deposit, but you locking your money up in a way that someone else can then use it. They can buy it, they can sell it, or whatever it is, and then they have to give it back to you. And because it's all on the blockchain, they can't steal it. That's just how it works. So I really like the concept of decentralized finance, and it's a real point of annoyance for myself. So I know in my superannuation fund there is a % holding of the Commonwealth Bank. I know that I have that exposure, and I know that I cannot touch my money in my super fund until I'm 65 or 67. So for me, that's like 25 years. Why can't I receive an income from renting those shares out to short sellers? Because I know I'm going to hold this stock. I have no idea on the direction, and I know how long but I know my time frame. So it would make sense for me to be able to lend this out to someone else to get an additional income, because they'll rent the shares from me to short it.
Probably a very simple answer to why you can't do that, Scott. It's because the funds are probably doing it and making the clip themselves.
The big funds are doing it. Exactly. Yep. Exactly. Yes, exactly.
Well, let us have the advantage of our money. Yeah.
So I just want to clarify what Phil said here, because he's right, and it's a real point of annoyance, right? Us as retail investors just don't have access to the scale that's required to be able to. It's also the relationships. There's a fair bit of backdoor type deals that occur. So if you're a hedge fund that wants to short a company, whatever it is, CSL, ANZ, Westpac, whatever you want to do it, you generally will book a formal meeting with, say, Aussie Super, Host Plus, someone else that has a big portfolio of shares. You guys will jump on a call, and then there'll be an exchange of contracts. It's not a super liquid process. And because they're dealing in the mega millions, it's just at a scale that retail investors can't get access to, which is why, coming back to the crypto world, I think it's a good solution, because you can do it at a real micro level within your own risk tolerances. So
yeah,
I'm hopeful that at a future date that can work.
And I just love the concept of anything that cuts out the bank and flies under the radar. I mean, the ATO of getting a bit of a decent view over all this sort of stuff, and trying to do your taxes is an absolute nightmare if you've had any crypto transactions. So good luck to any crypto traders out there coming into tax season. But I just love the concept. I think, I'm not a huge fan of government regulation and red tapes.
I know it's what we do. I mean, but we have to say that though. We, like you and I, benefit from a degree of regulatory capture, which is because we've done our exams, because we're qualified. We are allowed to give personal financial advice.
That's true.
Which actually, unfortunately, raises the cost of advice for other people, because they have to speak with someone who has the qualifications. But look, that's just a different story altogether. Look, the next point on the ticket. We've got a couple of ones. Do you want to go ESG, investing for impact, the greenwashing with the Vanguard case, or do you want to go on rising interest rates? What do you reckon?
Rising interest rates, that's a topical one at the moment. I don't even enjoy talking about ESGs. I think it's an interesting one, actually, because I just don't think there is any real consensus out there at the moment as to the direction of rates. There was so much talk about, September, October, potentially starting to see some cuts again. I'll be very surprised if we see that come to fruition. Personal opinion. But I kind of think about the stage 3 tax cuts coming through in a couple of months. That's going to put extra money in the pocket of a hell of a lot of people that don't have mortgages, that are probably just going to go out and spend it. Potentially inflation's not going to continue its way down. Well, but don't you think? Do you disagree?
That's going to push inflation up, I think. Yeah, it's going to.
Spot on. That's exactly what I'm saying. So I don't know that we'll. Yeah. So I think the rate decreases we've been hearing about coming later this year, probably a pipe dream. Maybe I'm wrong. Interesting to see.
Yeah, look, Well, I think, we'll see what happens if unemployment keeps ticking up. I mean, there's a lot of insolvencies running through at the moment, certainly in the property sector. We'll see what happens. TBA. I'll just touch on ESG stands for environmental social governance. It was the hottest term of the 2020s. Fell out of favor pretty dramatically because anyone that invested dramatically underperformed. And the argument is you should maximize your investment performance no matter what, make as much money as possible, and then donate those or give that money to charities or funds or allocate it however you see fit, rather than giving it to some quasi manager that's going to say we are ESG, but they then pick what's ethical in their mind, rather than you yourself with your own money, allocating that however you see, which is a more efficient process because you believe what you do, and you can then put your money to whatever you think is most suitable.
Yeah, it's just such a nuanced area, and everybody's ethics or idea of what an ethical investment is different. Different people are going to have different beliefs, which makes it difficult to have a one-size-fits-all product for something like that. And the other thing is too, like, how far do you draw the bow? Like, if I say I'm opposed to coal mining, so I'm not going to invest in coal mines. No, I'm not saying that's me. I'm just saying as an example, I'm opposed to coal mining. I'm not going to invest in coal miners. Do I then not invest to the banks that are lending money to the coal miners? Do I not invest in the caterers that are delivering food to the coal mine?
What about the electricity generation? What? So is that so you've got a hospital that requires electricity at 2 a.m. in the morning.
Yeah.
Coal is the option to maintain that. Like, this is why I think well-meaning people have ticked the box on ESG without actually understanding what it looks like. And I think it's really important that look, from my personal belief has been pretty clearly formed, which is the ESG in our view is not a suitable investment asset class for any of our clients, even if they come to us saying we seek an ESG option, or we don't want to be invested in, say, gambling or tobacco stocks, which is kind of the easy ones. Well, fine. If that's what you want to do, then we'll structure a portfolio, but you just need to understand that you are going to bear a higher level of cost. You're going to have a higher level of inefficiency in your portfolio, not just from missing out on those individual investments, because there's very, very few of those on the Aussie market, but also there's just going to be a level of inefficiency that comes in. So, for example, BP, British Petroleum, is heavily investing in solar, heavily investing in alternatives. Is that an ESG fund, or is that ESG stock? You'd probably argue it's not, but there is billions of dollars that they're funneling into renewables because they've got a lot of petrol stations around here that are soon going to be redundant, and they're going to have to come up with another plan on what they're going to do in 30 years' time with that real estate.
And that's actually a really good point. Like, you think, if I have a strongly held belief about something in that ESG world, what's going to make a greater impact? Is it just ticking a box on a form for my super fund, or is it me making considered purchasing decisions and deciding where I spend my dollar? And if everybody's making those decisions about where they're going to spend their dollar, that's going to shift the market, and that'll shift where the profitable industries are and the right investments are. I think trying to attack the investment it's the wrong outcome. I'm trying to think of a good analogy, which I can't right now, but it's always putting the horse before the cart. I'm targeting the end result, but I need to start back here at the beginning and try and shift the direction of all of that. So I'd say if you've got a strongly held belief, you make considered purchasing decisions, you encourage your friends and family to make similar purchasing decisions, and that's what's going to shift things over time, not ticking a box on a form and having an underperforming portfolio.
So the summary from this is work with a proper advisor to ensure that your funds are invested in a way that really does maximize its returns based on the science available, and don't just default to a random tick box that may or may not actually be helpful. For context, Vanguard, one of the biggest product providers, has just been sued by ASIC for greenwashing. They're just the biggest. They certainly weren't the worst. And I think actually, to be honest, feel a little bit bad about it because they were really trying to maintain ethical portfolios. And it's just an example on even if you're the biggest in the game or one of the biggest in the game, you've got a really clear ESG policy. You then try and put it in place, and then actually doesn't quite work, and then you get sued by ASIC. Well, there's lots of smaller ones who are themselves pretending to have an ESG portfolio with much less stringent processes, picking up investment funds.
Yeah,
I feel it's best to work with someone like us who's got a proper portfolio. We've got a process behind it. And then you choose to invest your funds from the surplus that's generated however you wish.
Yep.
All right. Thanks, guys. That's all from us for this pod. Keep the questions coming in. We've got a few ones we've been able to reach out. If you can also please like or subscribe on wherever you are listening, that would make a lot of use for me and Phil. We can see where the actual numbers are coming in. Initially, it was a lot of you users on Apple Podcasts, but now we've got more people on Spotify. So
interesting.
Hello to Spotify listeners.
Maybe our mums have changed their choice of podcast provider.
Probably has. That's it. All right, guys. Thanks so much. Speak soon.
Thanks, guys. See ya. Bye.
I have 8 minutes to go.